Hello, this video is about how to handle interest and dividends on Pennsylvania returns. As always, you can refer to your TaxAid Pennsylvania user guide and the Green Book DO2. Yours or mine, that's a Pennsylvania phenomenon for married filing jointly returns. But first, recall interest is on Schedule A and dividends on Schedule B. You should familiarize yourself with those forms. So if you're married filing jointly, Pennsylvania is going to require a schedule for each taxpayer if there are any individual accounts. Only one schedule would be required if all of the interest and dividends are in a joint account or in just one spouse's name. So TaxSlayer is going to do it properly. You just have to tell TaxSlayer who owns the account. Unfortunately, Pennsylvania doesn't tax interest and dividends the same way that the federal does. Some of it is taxed at federal, not in PA. Conversely, some is tax exempt at federal, but is taxed in PA. This chart here summarizes that. Ordinary interest is always taxable in both places. Pennsylvania doesn't tax savings bond interest. And ordinary dividends might not be taxable in Pennsylvania. Same thing for tax exempt interest and exempt interest dividends. Sometimes it's going to be taxed in Pennsylvania, and we'll talk about that. First, items taxed by the federal government but not PA. If the interest or ordinary dividend income is from a U.S. federal source or territories, Pennsylvania is not going to tax it. Sometimes ordinary dividends from mutual funds are sourced from a U.S. federal holding, and savings bond interest. Those are not taxed in Pennsylvania. You can also look at the Green Book. So if the federal government isn't taxing interest or dividends, Pennsylvania might, if the source of that income comes from outside of Pennsylvania. If it's an individual municipal bond issued by an out-of-state entity, or more likely in mutual funds that have holdings from not Pennsylvania entities. So what are we going to do? So you need to know how to adjust for Pennsylvania. It's going to be in a broker statement, and you're not afraid of them. You have to look for the items not taxable in Pennsylvania. So again, any ordinary dividends in box 1A from a U.S. federal source or territory, tax-exempt interest in box 8 of the INT, exempt interest dividends, box 11 of the DIV, coming from Pennsylvania or U.S. federal sources or territories. So you need a calculator. Sometimes the broker statements will do the math for you if you're lucky. If not, you're going to have to do some detective work. Sometimes the broker statements don't even tell you what the sources are, or they tell you the source, like here's the mutual fund, but they don't tell you where the mutual fund has its holdings. You could call the taxpayer broker, you could go online to the individual fund's website. We will probably have a shared drive which has the detail, but probably go see your LC and decide how much time you want to spend on it. Let's talk about TaxSlayer entries now. So the first thing to know is that Pennsylvania wants to see all of the interest that's reported on the federal return, including all tax-exempt interest and exempt interest dividends that are not taxed by the federal. Pennsylvania wants to see all of it. So, and then you're going to have to subtract amounts that are not taxable to Pennsylvania. So the interest and dividends that you enter will automatically flow to Pennsylvania. You don't have to do anything. But for tax-exempt interest and exempt interest dividends, extra entries are required in TaxSlayer to tell it to go to Pennsylvania. And then you're going to have to calculate and tell TaxSlayer as an entry how much is not taxable in Pennsylvania. So let's look at Schedule A for interest. Schedule B looks a little bit like this. The basics are the same. So in the first line, TaxSlayer will automatically flow the federal interest here. You will have to add all the tax-exempt interest, so it shows on line 2. And then on line 6 and 7, you're going to subtract out any interest from Pennsylvania entities or from the U.S. government, because those are not going to be taxable. Let's start with U.S. savings bond interest, box 3. This is relatively easy. You input the entry in box 3, then you scroll down and you find where it says enter the savings bond interest you want subtracted. So you would enter the amount and your state. Let's look at a tax-exempt interest example. So let's assume that somebody has tax-exempt interest of $5,000. And you look in the broker statement and you see that that comes from a mutual fund, the Spider Nuveen Fund. And then you go further in the broker statement to see where Spider Nuveen gets its interest from. So here's an example of what you might see in a broker statement. You've found the Spider Nuveen Fund, and here you see that 2.54% of its interest came from Pennsylvania sources. And then you also saw that you don't have to add anything more because nothing came from U.S. territories or federal sources. So 2.54% is subtracted. That is $127 by doing the math. And then the rest is going to be taxable because it comes from outside Pennsylvania. So in TaxSlayer, after you enter the taxable interest, enter the tax-exempt interest, scroll down and find the box that says add interest items for taxable state interest. You'd put in Pennsylvania, who owns the account, and the full total amount. Then in the Pennsylvania tax return, you go to income subject to tax, select interest and dividend income, and in the first box, interest income from Pennsylvania, you enter the amounts not taxable for Pennsylvania. So we calculated that to be $127. Now, if this was a joint return, you would split the amounts not taxable between the taxpayer and the spouse. And if there's multiple sources that you have to calculate, you have to add them all up because you can only do this entry once. Exempt interest dividends, the process is pretty much the same. Let's assume you have a broker statement and in box 11 has 415. You have to find out if any is not taxable. So again, look for the detail. Broker statements usually have separate sections that are differently named where you might find the information you need. So where does the 415 come from? Here we see that it came from an American fund, tax-exempt bond fund with symbol AFTEX. Okay, we know it came from there, but how much is from Pennsylvania or federal sources? You have to go further into the broker statement, diving deep. You're going to look for something called maybe mutual fund supplemental information, interest by state and territory. Here's an example where we find the AFTX fund. Nothing came from Pennsylvania, 3.29% from US possessions. So you can do the math and figure out that $14 isn't taxable in Pennsylvania. You would go to TaxSlayer. In the DIV entry screen on the federal side, you scroll down again to add a dividend items because it's taxable in your state. Select Pennsylvania, the owner, and enter the full amount. In Pennsylvania, again, go to income subject to tax and then interest and dividend income and enter the exempt interest dividend income into these boxes that will show up. Again, taxpayer or spouse. Sometimes ordinary dividends, which come from mutual funds, would contain interest from a U.S. federal source. You would have to look in the broker statement to see if you can find the information. Again, multiply whatever fund dividend dollars there were by that fund's U.S. federal source or territory's percent. Again, you can make only one entry and you have to add up all different sources to make those one entries. Other things to talk about. A reminder for the tax forgiveness schedule SP, you need to report all interest, including any tax exempt that wasn't taxed in Pennsylvania. So there's a line for you to add that back. We didn't talk about original issue discount. Normally that's treated the same way as interest for Pennsylvania purposes. Again, look in your Pennsylvania user guide. We didn't talk about market discount or bond premium. Again, follow the NTTC Pub 4012 for what to do, and then the PA user's guide. See your local coordinator if you're not comfortable with those. Okay, don't strike me down. So if there's exempt interest dividends, tax exempt interest, should you make a PA adjustment to save the taxpayer some dollars? Maybe. How much time do you have? So if there's not going to be an impact on the Pennsylvania return, for example, even if all of the tax exempt interest or dividends are taxed in Pennsylvania, they still qualify for 100% forgiveness. You don't really need to take the time to do those entries. If there's going to be a very small impact to the taxpayer, maybe you save them $5, do they want you to take the time to figure it out? It's a discussion you can have with them, and maybe you don't end up with a 100% accurate Pennsylvania return. Okay, I would encourage you to make all of these entries in the practice lab and get comfortable with what you need to do in Pennsylvania for tax exempt interests and dividends.